So we'll talk about the broader growth slowdown that's materializing, and one of the themes I think that most podcasts you'll listen to will agree with the fracturing of the world into regional spheres. Point here I want to cover: we've got, if you just look for the headlines, the indicators in each one of these regional spheres, you can see the growth slowdown materializing coming in. So we started talking about that really last week when we got the Q2 oil consumption data, the declines showing up in the Southeast Asian economies. That's the fallout that's precipitating downstream from the Department of War and the Department of the Treasury's operations, Epic Fury, Economic Fury, etc., materializing and the actual economies, and then that gets into the banking system. So a few headlines on that front. Cameron, will start with the PBOC's uh, emergency. I don't know. They probably weren't framed as emergency, but they were required to step in and inject liquidity into the Chinese yuan's repo market. So in the headlines, when you see this reported, it was pretty much everywhere. The headline called it a reverse repo operation. That's what I would frame as a misnomer. Um, the broad understanding of reverse repo, I think most people's kind of idea of a reverse repo facility is really grounded in the Fed's reverse repo facility, or RRP. Remember back in 2022,
Yeah.
2023, as the Fed was amidst its massive hiking cycle, like in relative terms, right, compared to the 40-year bond bull market, the hiking applied against money markets and the dollar was massive in that sense, right? But yeah, moving off of zero up to, I think, 5.5 was the high in mid 2023. The reverse repo facility was kind of providing a tailwind. It was sopping up excess liquidity out of U.S. dollar markets, right? And the way that facility worked, when you say reverse repo, your counterparties who engage with the Federal Reserve Bank of New York and the FOMC desk, um, they post their dollars to this facility, and then the Fed will fully collateralize it. So, like, to eliminate the credit risk, you're not just taking Fed IOUs. They'll secure it with one of their Treasury holdings that they amassed during the quantitative easing buildup post 2008. All right, so that's what we think of in reverse repo, right? It's a liquidity removing. This is
Right.
not that. This was when Bloomberg, whoever their like the editor puts reverse repo in the title, it's really glossing over the fact that it's actually a liquidity injection. What we saw take place last Friday, PBOC came in with what's the number in yuan, Cameron, if you can zoom in, 348 billion
349
yuan.
billion.
It's about $57 billion, 51 billion, 51.7 billion US dollars would be the equivalent. What's happening here, the PBOC is operating as a repo facility counterparty. So it's doing repo operations, not reverse repo. Its counterparties, its financial institution, banks, et cetera, are showing up to access overnight or short-term cash. Probably 7-day would be the most common in the domestic Chinese market, is my understanding. They post collateral, which is probably going to be, for the most part, a government or state and local government IOU, and then they receive yuan, fast cash advances, for lack of a better term. So this is uh, kind of like the analog is where the U.S. money markets were in New York in second half of 2019, right? And it hasn't reached that scale yet, right? What the magnitude that the FRBNY stepped in during the repo rumble was like $75 billion a day, and they repeated it for multiple days until the problem went
Yeah.
away. Um, so we're not at that 75 billion liquidity injection, but it is your indication that, like, it's consistent with a backdrop where you've got declining marginal demand for money from the private sector within the domestic Chinese economy, as that business tide is receiving. So the central bank is doing what the central bank has to do, ultimately operating as the lender of last resort. But this is just one headline. Also interesting that it's being misframed in the title. Usually these Fed watchers or central bank watchers are experts on this area and know better. So the choice of framing this as a reverse repo operation seems a bit deliverable or a bit deliberate, in my opinion, putting some spin on the ball as everyone commonly does. All right, we'll move on to the U.S. front. So we saw a headline. This was yesterday in Walmart's Q2 earnings call. Showed evidence that this global tide, like the global economic slowdown pullback that's underway, it is hitting the U.S. consumer as well. Now, doesn't mean it's dire, right? The tide pulling out doesn't reflect catas- catastrophic situation for everybody. It's kind of that quote, the Warren Buffett aphorism: when the tide pulls out, we see who's swimming naked. It's all relative, right? Some
Yeah.
people, when the tide goes out, you're going to be much more impacted. It depends on how far over your skis you were. Some are going to be more resilient. Um, but yeah, it does suggest to me that like we're seeing everywhere else, all these other headlines were showing in this downstream effect from the broader operation that the Department of War, the Department of Treasury really kicked into high gear with Epic Fury. But I could also go back and argue, hey, this actually started on April 1st, 2025 with Liberation Day. And it's just been a series of, the same broader, thematic operation since. We could make that argument.
Yeah.
My point here, it's hitting Walmart, the American consumer as well. It's kind of a war of attrition. The way I would view it, it's you just want to be the last man standing. All right, so then we'll move to Trafigura. This headline that showed up this week I found interesting as well. Just given you pull up a copper chart, copper has been strong. Obviously, everybody knows or should know if you follow the geopolitical podcast circuit for any time at all. You probably heard someone talk about Dr. Copper.
Yep.
Uh, it's
Definitely.
basically a benchmark or proxy for global economic growth, right? If your economy is growing, what are you doing? If you're in the 21st century, you're laying more, copper wire, right? Electrical capacity, all of that. So what we saw this week, we know the copper market's tight. We know, gold, silver, et cetera. Metals markets are tight, specifically LME. We saw Trafigura deliver 20,000 tons of copper into the LME warehouse earlier this week, which collapsed the backwardation in that commodity curve. So backwardation.
I would say for our viewers and for me, define backwardation.
Yeah. So backwardation is so you think about the futures curve, right? What are futures? It's just a contract to buy or sell the underlying asset or commodity at a future date, rather than a spot market or a cash market would be like, hey, we're going to buy it, we're going to settle now, or pull forward that settlement. So if you look at that curve, normal backwardation is a situation where your future prices are below the spot market price, right? Which kind of, for most goods and services, like if I want something, right, you would benefit, like you would pay a lower price if you delay your gratification like into the
Right.
future. So for most commodities, that's the normal setup, right? There's other commodities like gold, for example. It doesn't get cheaper to delay it. It's in the opposite circumstances. The the spot price sits typically will sit below the futures, the rest of the futures price. So if you want it later, you will generally pay a higher price. Gold just tends to sit more often in contango than any other commodity typically will do, right? So what we saw with that delivery, Trafigura shows up with 20,000 tons. To get 20,000 tons of copper means that these companies are involved. They operate shipping vessels. They're essentially just giant hedge funds who make money on the bid ask instead of on securities or GameStop or what have you. They're doing it on oil tankers or uh, Suez Maxes stocked to the brim with
Actual physical things, not just the financialization. Yeah.
Yeah, they're playing the bid ask, but at a different game, right? But the point is to get those 20,000 tons of copper, like Slack resources, it means someone else had to not consume them, which means if you just hold all these thoughts and you connect the forest for the trees. Um, Southeast Asia, the economic decline, the lower oil consumption. That means all else equal, less copper being laid, right? So that copper delivery is telling you there's slack resources in the system. They're moving now to the warehouse. Now you see that reflect with the collapse of the backwardation in the commodity curve. So if you go to the next slide, Cameron, um, this is like mechanically, like we said, those 20,000 tons came from somewhere else. What this is telling me is like Dr. Copper is providing one more strong piece of data in the big picture mosaic that we're kind of building up and forming, that indicates global growth is slowing. You won't see the GDP prints. Like if you're waiting for that to tell you the slowdown is taking place, you're going to be late to the fact. Those are lagging indicators. Those go through three different months of revisions. Like to call the slowdown, if you're waiting for it to show up in the data officially like next January, you're going to be too late here. But this is just one more signal. So you can see other examples where this happened, right? Like obviously, like copper's tight. The copper market is very tight, like structurally with the electrification, the AI build out, all that going on. Um, in the long run, we're like if you listen to any analyst on this, Gehring and Rosenzweig, all of those pros who focus on the commodity market suppliers, the production, all of that. They'll tell you, and I would agree with them. Like long run, copper, like we don't have the supply we need. We're going to need further investment. For right now, where this process is, the growth slowdown materializing, all of that. You look for similar situations where the backwardation vanishes from the curve. It's synonymous with like a structural pause in that copper bull market, which is it's kind of that wile e coyote walking out over the ledge, and it's like, oh, like we need to slow down. We've wrung out all the excess growth from the the blood from the rock, if you will, and it's time for that to be baked in across other markets. So holistically, I think that's just three more stories, three more developments that really confirm this is where the operation that really began on Liberation Day is moving into as it goes into the next phase.